Here with MI Rich. Today's stock is Sherritt International. Sherritt International is a mining company that focuses primarily on nickel and cobalt. It's listed on the TSX, Toronto Stock Exchange, and this could be the next Micron that went to the moon. Now, Sherritt International, it is currently sitting at a PE ratio of 0.2. Bam! Wowza! This is so cheap. And not only that, there's more. Its price to book ratio is at 0.2 as well. Now that means that everybody who's a shareholder or buys in at this price, I think around the 40-cent mark right now, if they buy in at this price, they are getting about $1 of equity for 20 cents. So this is a very interesting proposition. The assets are not unsubstantial. They're not nothing. I mean, if you or liquidate the assets, things like mine vehicles, power generation equipment, drilling equipment, these things, I mean, some of these things are in Cuba, and so that's one reason why Americans have to buy this over the counter as a over-the-counter stock. But if you sell these things, even if they get 80% of the value for their assets, you're still looking at a price to book ratio of about 0.25, which is still like you're getting 4 times the money that you put in. Now, that said, I mean, if they couldn't sell the assets for a reasonable price and they went to like 50%, then your price to book ratio would be looking at like a 3.6, which is not good if they're selling the whole company. But think about it, if you were to buy some like makeup company like L'Oreal, you'd be spending a lot more than that for a company that's not growing. So just something to keep in mind. Now, the share price is down, way down, due to tough times. Now, they had a big debt mistake trying to get into a mine in Madagascar, and about 6 years ago, and crashing nickel prices have not helped their situation at all. So they've had to really pay off a lot of debt, and they've had to try and restructure a lot to improve their company. So no dividend, but Sherritt International has been growing at a 12+% rate after their Madagascar blunder, which is about the market average. But that said, non-Sherritt's now Sherritt's growth is highly dependent on earnings, and they are expected to report this next reporting period. They're expecting to report negative or very low earnings. So this could be a major factor. But they are well positioned to take advantage of higher nickel prices and cobalt. Now, Sherritt's bull thesis, basically, they dabble in a few things, but their main company is focused around nickel. So their bull thesis is that lithium batteries are going to be the jackpot for laterite nickel, which is what they produce. Now, laterite nickel is not cheap pig nickel that is something that the Philippines and Indonesia have been undermining the nickel price by putting this pig nickel into China. I mean, which is a great success story for stainless steel, but they're making this sissy stainless steel, which has really undermined the nickel prices and hurt Sherritt. Now, Sherritt, though, makes this high-grade version of nickel, which is needed for future processing of lithium batteries, especially the second generation of lithium batteries. Initially, nickel was not used in production of lithium batteries, but if I act now, I could be invested for a massive demand increase, because second generation lithium batteries are expected to use 20+% nickel in them. And if you look at Tesla's plans, Tesla's second generation battery is expected to use around 50% nickel. So along with that, global nickel inventories have actually been decreasing, and no major significant finds, I guess, for the more high-grade or laterite nickel have been found for quite a while. So this is kind of a setup for higher prices in nickel. If you believe the nickel prices will go up, and if you believe Tesla will dominate future cars, then nickel price is likely to go higher than King Kong can climb. So that is the bear thesis for Sherritt, because if nickel prices explode, their value is going to explode. As I said, they're really tied into their earnings. Now the bear thesis is that demand doesn't grow. Maybe battery demand isn't that high and they improve their battery that doesn't use nickel, or for second generation or third generation cars, or maybe the second generation, maybe electric cars don't pan out at all. Or the other thing is that countries that like to pollute, they create this more polluting process by using pig nickel and ship it to countries that like to make this more polluting stainless steel, will undermine the price of nickel globally. And so in that case, Sherritt will struggle to make decent profits on their nickel, even though they have a very efficient high-grade nickel process, one of the more efficient high-grade nickel processes in the world. So that is, even though that is their kind of moat or main argument for doing well, this could really hurt them if nobody needs the high-grade nickel in large quantities. So my take on this stock is that I would be on hold for the moment. I don't want to buy it right now because they are expected to report kind of low earnings or negative earnings. But 3 months after that, if they're posting profit again, and if nickel prices are starting to creep up, even 6 months after that, I will be very interested. So I don't know, I'd love to hear what you think. Now remember, in addition to this, if you act today, you can subscribe for free here. Now, thanks for watching. Let me know what you think about Sherritt International in the comments, or if you like this video at all, you can let me know again in the comments. But that's it for now. We'll see you in the next video.